All right, I think I figured that out. Hey everybody. Cool. So, let's see if I could figure this out a little bit more. I found the chat, I think. The QR code is my Bitcoin code. And let's see here. Cool. So with that being said, I think I will start the show. Okay. Hey everybody, I'm Gary Palmer Jr., you're you, and together we are Minting Coins, your trusted source for crypto news, Bitcoin, blockchain information, what is happening in the space, what is happening in the world, how does this all come together in the world of Bitcoin and money and decentralized immutable technology, how does that connect with politics and traditional technology, with culture, with differences that different cultures have and different governments have across different borders around the world, and how this is just colliding in sort of a one world direction, a one world understanding, a one world network, everyone participating in and around Bitcoin. If we take a peek at Bitcoin, see what's happening in and around the world right now in coin360.com, it's a major explosion. Bitcoin BTC is up 21% in less than 24 hours. We're currently at $13,758. If we take a peek over at Live Coin Watch and see what that says over there, we're actually a little bit higher, 13,895. It just at 13,900 a second ago. So the prices are just going up very, very quickly. Ethereum is up 13, almost 14%. But at the same time, while Ethereum is up 14% in terms of Satoshis, it's down, because for something to be doing very, very well, its increase needs to be more than Bitcoin. So because Bitcoin is up 21% and Ethereum is only up 14%, the difference there, right? The 14 to 20 is 6 plus 2, 7, 8. That 8% difference means that Ethereum compared to Bitcoin is 8% down. So this 13% up in US dollars is actually 8% down in terms of the Satoshis, in terms of the Bitcoin. And it's very interesting because over the past couple of days, we've been seeing a lot of people on Twitter, a lot of people on Reddit, really capitulating, really freaking out, really feeling a lot of pain. This is exactly what a lot of people have been talking about with there being a major sell-off in the alts. All throughout the past year, there's a lot of alts. There's a lot of, I'm not talking about bad projects. There's a lot of good projects, a lot of great projects with great teams, great technology, smart people working together in community to, get these projects up and running and actually delivering something, pushing, knowledge forward, creating code and getting people to use that code. But all of those projects are not Bitcoin. And right now, it really seems like people are experiencing this situation where they're feeling the pain. We're seeing altcoins dropping, 20% a day. If Bitcoin is up 21% right here in dollars, and there's another coin down here like Monero that's, down 3%. In terms of Bitcoin, Monero is down 25% in terms of the Bitcoin value. A lot of these coins, not all of them, but a lot of these coins, VeChain down 10% in US dollars compared to Bitcoin being up. This right here is amazing. Decred up 20%, being on par with Bitcoin is just a very strong position for Decred, limited supply. Again, that's like an example of another strong team out there, a strong project. Decred is a token that we're interested in terms of the community support around them, and we've heard a lot of their talks, and they say a lot of good things, but people on the Ethereum developers, Ethereum coders, they say a lot of very intelligent things. They're pushing the industry forward. EOS, they're saying intelligent things. They're pushing the industry forward. There's lots of projects out there. Decentraland has an amazing project, a very interesting project. Still has a lot of risk, but it also has a lot of opportunity. What Zen is doing, what Horizon is doing, in terms of being a privacy coin, in terms of being backed by Grayscale, in terms of, developing, code that not only that they can use, but code that everyone across the ecosystem can use with their partnerships that they have with IOHK and, Input Output Hong Kong, Cardano, that whole team. They're doing amazing work. But what's happening right now is that in the market, we're seeing this huge drop in the market. We're seeing this, this blood in the streets of people freaking out. And after 24 hours of this happening, when this started happening a couple of days ago, people saw huge drops in the altcoins. Just what do we have here? Like look at this Tezos right here going down, 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 down. And so once it went down so far, people felt that pain. And then more and more people started selling, and more people are selling. And there have been like days straight of people selling these altcoins, and Bitcoin just skyrocketing in terms of the value. And when we look at the delta of the value of Bitcoin versus the value of Ethereum now versus the value of Bitcoin and the value of Ethereum where we were 2 years ago from now, a couple of years ago, Ethereum was at this $300 to $400 range. People were buying ENS names. ENS names, really helped drive the price of Ethereum up. The ICOs helped drive the price of Ethereum up. Ethereum went to that $1,500 mark. At the same time, though, then Bitcoin at the equivalent stage was just, about $5,000, maybe $7,000. But here we have Bitcoin back at that $300 to $400 level. But Bitcoin is just shooting up, about to hit $14,000, potentially, who knows at this point. And why is it going to be hitting that number so quickly? It's because there's this extreme limited supply in terms of the amount available, of total Bitcoin available. And so if we want to take a look at this updated sheet right here, from the bitinfocharts.com, it's the Bitcoin rich list. And when we look at actual Bitcoin addresses on the Bitcoin blockchain according to this data, we can see that in terms of total number of unique addresses out there that have more than $1,000 USD, we can see that it's only 3 million, 3 million. And so that's less than 1/10 of a Bitcoin at this point. Is at $3,000 because, or no, that's not true. So a tenth of a Bitcoin would be let's say $1,400. So this is less than a quarter of a Bitcoin. So there's less than 3 million addresses out there that have about unique addresses that have about a quarter of a Bitcoin, and this is a very few number of addresses that have that much Bitcoin. And as we go higher, when people want to buy Bitcoin and these institutional investors want to buy Bitcoin, and people, these millionaires, we used to talk about them all the time, the 43 million millionaires in the world. Some of them just have 1 million, some of them have 10 million, some of them have $1 billion. All of these people, they're not all going to be able to purchase one whole Bitcoin. They're not all going to be able to have their own Bitcoin. So there's going to be extreme scarcity going on, especially when we have institutional investors with hundreds of millions of dollars and hundreds of billions of dollars and potentially even trillions of dollars without even getting into the the debt and derivatives and all of that craziness, which is quadrillions of dollars. But, there are only currently on the market, we can see here, 17.7 million Bitcoin. And so when they want to go and they want to purchase 100 Bitcoin, we can see that there are only, number of addresses that have between 100 and 1,000 Bitcoin. There's only 3.5 million of them. Addresses between 1,000 and 10,000, there's only, 4.5 million of those. And so if somebody wanted to come in and just, purchase a large amount, that's going to drive the price up. And that's just the crazy situation where the world is finding itself. And really what I'm getting to is that while everyone is feeling this pain and while everyone is feeling this capitulation, and philosophically, I agree with the situation that's happening, right? Like, I think Bitcoin is the most decentralized project out there. It's the most open source. It's the most neutral. It's the most borderless. It's the most censorship resistant. It's the most, decentralized project out there. It has the greatest proof of work, which is just contributing into the, extended length of how long old transactions are locked into the blockchain. So even if someone did roll back the blockchain to like a year ago, which would be very difficult, and if you had Bitcoin on the blockchain at that point, then you would still have access to that. But the point is that to even roll it back 10 minutes would be very difficult, and to maintain that, the whole world can get sucked back into Bitcoin, and Bitcoin can become this great utopia and can totally allow everyone to have everything that they ever dreamed of, according to the Bitcoin maximalists that are understanding of it, who are behind it, who are developing it, and even evangelizing it. But people aren't going to do, what's right. People aren't going to do, what's best. There's going to be other great opportunities out there. And I'm sure that we're going to see a resurgence of the altcoins, a resurgence of the projects that have backing from a lot of these, OGs, backing from a lot of these insiders, backing from a lot of these Wall Street guys who just have the money and have the connections to to build this, right? Because you need a lot to create a system and a network and an ecosystem. You just need very smart people to work together. You need them to be focused. There needs to be funding. There needs to be collaboration. There needs to be consensus. And that's what Bitcoin is all about. That's why Bitcoin is the one ring to rule them all, because once you have a second network, that second network, according to the power law of power distribution, the second largest network out there is going to be half of the size of the largest network. Just like it's something that we see throughout nature and throughout large networks. And I think like large cities and large populations, like the largest city in the world, the second largest city in the world, and the respective sizes of super large networks, that's how it sort of breaks out. And so there's a focus, there's a concentration, but we are a long way until we get there. We're a long way until people start to realize that Bitcoin is this unstoppable force. And if you're a diehard crypto person, that might sound crazy that that we're not there yet. You may think that we're definitely already there. But until you go to the gas station and a gas station says how much, how many Satoshis it costs to, fill up the gas, we're not really there yet. Until you can go, buy loose cigarettes on the street corner, from anybody to anybody, and they're taking Bitcoin, then we'll be there. Then everyone's going to realize Bitcoin is it. All of the other projects that exist will exist, but there'll be the proper distribution, the proper relationship of the largest versus the second largest versus the top 10 largest versus the long tail of additional protocols out there that people may or may not tap into in this greater ecosystem of this new thing, right? This new thing of blockchain, which is both a technology and an asset. It's, you know, a protocol that allows different people and different systems all across the world to communicate with each other. And it's also this asset that, you know, is required for the system to work. And there's also this asset which, as it becomes more scarce and more in demand, not just because of the scarcity and the security of it, but also because of the growing utility with all of these applications that are going to be built upon it, you know, these are just the very beginnings of the things to come. And it's probably going to take, you know, this bull run and then the next bull run and then maybe even the bull run after that for, you know, for this, you know, greater next level plateau to happen, for this catalyst to happen, to really, you know, push the protocol up, to lift it up into the, you know, from the subconscious and conscious into the everyday routine of people all around the world, especially, you know, from first world countries all the way down to third world countries. And it's going to be really interesting. This is very, very early. A lot of people say, you know, they talk about email, they talk about Netscape, they talk about the early days of the internet. Are we the pre-Netscape days? Are we the post-Netscape days? When I started using computers in school, we had Netscape. And so, you know, before that, you know, how were people, how were kids, how was the mass public really getting involved in the internet? It wasn't as easy before Netscape. And right now, it's not easy for the average person to get involved in crypto. The average person doesn't understand it. The average person doesn't see the application or utility of it as a store of value, let alone understanding the application or utility of it as this new and different type of protocol. You know, this mechanism of trust and relationships between people and, you know, smart contracts and internet, you know, internet connected devices and, you know, AIs. Like, all things are going to be a part of this network, are going to be a part of the user base of the network. You not only have 7.5 billion people using Bitcoin in the future, theoretically, you know, not theoretically right now, to a huge potential, but you have, you know, every device that uses Bitcoin is going to be a user on the network, which is going to increase the proportional value of that network. Let that be reflected in the overall, you know, infrastructure of the companies and the value of the companies that are, you know, supplying different services to create this ecosystem. And also let that value be reflected in the value of this token. And the value of this token, you know, is you know, what the old school is realizing, what the legacy system is, you know, realizing, is that the value of this token is just inherently scarce, and it is unstoppable because of the, you know, properties of it being decentralized and censorship resistant and borderless and immutable and open and, you know, and all this great stuff. And, you know, it's just, there's no other alternative other than to go with it, because if, you know, anyone doesn't become part of this technology, they're going to be left behind, right? It's like people wanting to stay with Blockbuster. It's not going to work out. Things are changing, right? You know, Blockbuster is shifting to a streaming service. It's just as simple as that. And then we see this throughout the world. It's like, you know, truck drivers and taxi drivers and Uber drivers. And if you drive an Uber, it's all shifting, right? All of the Ubers are going away, and the Ubers that are going to be here are going to be self-driving cars. And all of those jobs are going away. And we have decades, right? We've had decades to know about it. We've been told for decades this is going to happen. We know this is coming. So anyone who's planning on being an Uber driver in 5 or 10 years, you know right now, like, we need to make different decisions, and everyone is making different decisions. And they're, you know, the people in the know, they're basing these decisions off of what is actually happening in the world. So just to check what's going on over here. See how the chat's doing. We have like a huge number of 11 people watching. Hit that like button if you haven't hit that like button yet, please. I would appreciate that. Every little bit helps. And all right, what else we got going on? Just checking over here and over there. Anything super good in the news?
Everybody home?
Yeah, the fees are definitely going to be higher probably right now. And go maybe check that out. Yeah, so I just went over here to, can you see where I am? Bit info charts, and over at bit info charts, we just zoomed into the past couple months. So here we could see February. You know, Bitcoin was hovering around at 3,000 point. It was pretty dead. March, April. So I guess in April, you know, the fees started popping up a little bit. April, May, all through May into June. And here we are. So I guess the average transaction fees were a lot worse earlier in the month. You know, I mean, what was happening? I think what I was reading is that we jumped. It was like 500 million that it took to get us, you know, up to $8,000 from like, you know, $3, $4, $5 to $8,000. It was like 500 million, and then it took, you know, just a couple hundred million to get us from $8,000 Bitcoin up to, you know, like a $12,000 Bitcoin, and since then. Where are we? So it just dropped $100. It's like 7,797, 7,008, or I'm sorry, 13,800. But the transaction fees, you know, we could definitely see bitinfocharts.com. It's those are up. Block times are good. Market capitalization, as you know, we are popping up. Look at this. Beautiful. Mining profitability. Here we go right here. So once you know, we saw the mining profitability pop, then this was a huge indication. And then here we see it pop again. And, you know, we've said this for a long time. This is something that everybody knows. This is something that you know as of right now at the least. Mining profitability precedes price. We definitely, you know, see a pattern of that, or at least I do. Hash rate significantly increasing. Hash, directly related to security, directly related to price. Difficulty going up. Cool. So that's what's going on there. So the fees are definitely increasing in terms of what you were talking about, 1980s hello. Median transaction fee. There you go there. All right, so in the news today, we have a couple things going on. We have pro-Bitcoin lawmaker bashes the SEC for third world approach to crypto. So the SEC is taking a third world approach to crypto regulations, and that's driving businesses away, says this pro-Bitcoin U.S. Congressman, Warren Davidson. And this is his photo right over here. So this pro-Bitcoin lawmaker is furious that the United States is taking this third world developing economy approach to cryptocurrency regulations. And thanks to the lax SEC and the bumbling Congress, I guess according to him. And so this Congressman Warren Davidson warns that the legislative foot dragging is putting the United States at a competitive disadvantage in the burgeoning crypto market. So he says the SEC had better wake up, or else the United States is going to be left behind. This is something that we all know. This is something that we have all seen for the past, 5 to 10 years, you could say. So I suppose there's a quote here. It says, "This is a third world developing economy kind of approach where if you want to launch a company, you go negotiate with the government, and maybe you can get a deal, and maybe your deal is different from the other person's deal. And this is not a free market. This is not capitalism. This is an oligarchy where some people have a different set of rules than other people, right? And this is true on an extreme case on a state-by-state basis and what we can and can't do inside New York State. This is true on a case-by-case basis with people who go and get approvals, and other people go and they get denials, and some people are given and granted permission, and other people are not given and granted permission. And I suppose there's a third group of people who stay anonymous, who simply don't ask for permission. And we all need to figure out what percentage of each of those that we are, depending on the situations that we have to live with. So it goes on to say here that while Davidson says that while the Securities and Exchange Commission is fumbling around, the crypto businesses are moving offshore to places where there's more regulatory certainty. And he goes on to say that we need the certainty that if you're going to do these things, you will be deemed an asset. And that's been one of the drawbacks of the regulatory guidance. It's guidance that's often not found to be binding. Then you wind up with a patchwork of court decisions that try to discern things after the fact. And frankly, it scares off capital, because while people, have these promises, we see people get these promises and then they say it's, not final, it's not law, they're guidelines, they're regulations, then the rules change and the systems change, and things go to Congress, then Congress changes it, and then it goes to courts, and then the courts change it, and it just takes a long time to go back and forth to get any sort of, answers and scenario. And in the meantime, there's all these other things that are being built in Dubai, they're being built in Moscow, they're being built in Beijing, they're being built in Sweden, they're being built in Hong Kong, they're being built in France, they're being built in Germany, they're being built in the UK, they're being built in South Africa, and they're not being built inside the United States. And that's the situation that we've seen for a long time. And even with inside the United States, there's all companies are at least leaving New York State, and they're at least going to any other state in the continental United States besides New York. And that's just creating an incredibly difficult situation for anyone inside New York who's trying to get things done. What the average person would say would be the right way. The SEC senior advisor for digital assets at the SEC, Sapanzik, had a new position created specifically to address the cryptocurrency industry, who we have talked about before, stated here that we put out the guidance on at least the initial coin offerings beginning in 2017, how we apply the law to the insurance of digital issuance of digital assets, and they put out a number of statements since then. And so the SEC is saying that they believe that the guidance is clear, when it's anything but clear. It's really not clear at all, and we can see that in the actions of what's happening in the industry, because businesses are being driven away and businesses are setting up shop in other places. Even Facebook's Libra coin, they set up in Sweden. They didn't set up in San Francisco. They didn't set up in Austin. They didn't set up in New York City. They set up in Sweden. And, and that just should be the cherry on the point that just emphasizes that all businesses are going anywhere, and definitely not inside the United States. So she goes on to say that it's important to remember that the distributed ledger technology is nascent and fast evolving. Our laws that we currently have are flexible, principles-based, and very broad. This isn't the first time we've had a new technology come to bear. We regulate around activity and conduct, and they try to look at intentions, and they try to look at what's actually happening, but it's just not fast enough in terms of a process. And there are other decision makers, people with both responsibilities and authorities, accountabilities over the systems, who are sometimes giving conflicting advice. And that goes on the regulatory level, it goes on the corporate level, it goes on the governing government level, of these conflicts with all of these different jurisdictions and all these different red tapes and all these different levels of government and bureaucracy. Yeah, so someone said the SEC is a dinosaur, handicapping the United States. Who's this according to? Hester Pierce, Crypto Mom. Yeah, it's a really difficult situation, and as we see the price of cryptocurrencies increase, and we see that Bitcoin up 21%. Ethereum, shooting up 17%, at least catching up a little bit. EOS, Litecoin, all of these different projects out there, which are changing the way the world connects with each other, changing the way that finance works, changing the way that relationships are structured in both real life and in the digital world. It's definitely an interesting time. These are new times, and very exciting times. I'm super excited. I think the price of Bitcoin can definitely go up. I think that gravity exists in numbers. I think that at some point, what goes up has to come down, even if it continues to go up and up and up, and so far that it starts orbiting in the moon. The market breathes, right? At that level of scale, I guess in physics, things don't just happen in a straight line like a particle, but they, when we watch them in, this time, they move like a wave, right? And so it's not a straight line, it's like a wave. Things go up, things go down, Bitcoin goes up, Bitcoin goes down. If everyone's buying Bitcoin, in my experience for myself, I just think, okay, what do I want to do? What do I feel like doing? I sort of like feel what everyone else is doing. I think if they're right or if they're not right, I feel what I want to do, and then I just do the exact opposite, because whatever I want to do is wrong, and so maybe I'm completely wrong right now, but I just think that the price of Bitcoin can go parabolic at any time. I think that gravity is a thing with the price of Bitcoin. I think even if the price of Bitcoin disconnects from the altcoins, I think the altcoins will be still connected to some degree. It's a huge risk if you're someone new in the industry, if you're someone average in the industry, if you don't know what you're doing in the industry, then don't look to me for financial advice, because this is just educational and news and commentary. But it really seems like over the past 10, 11 years of cryptocurrency's existence, the one coin that has performed year over year happens to be Bitcoin. And I don't think any other coin, to date has performed as well as Bitcoin, nor has the properties of Bitcoin. And if you just needed one, horse, to put that bet on for an extended period of time of, money that you can afford to lose, and money that, you don't need, and money that, you can, risk, then, Bitcoin may be that bet. And if you're, super risky, there's a lot of these other projects, and if anyone cares, it's the Ethereum that's awesome, that I think has the greatest network effect, and we're sort of seeing that part reflected in the price now. And it's just gonna be really interesting to watch it, progress, and to watch it as time goes by. Cool. So if you haven't already, please subscribe. To us over here at Minting Coins, youtube.com/mintingcoins. Feel free to follow us on Twitter. Check us out. If you're in, the New York area, Western New York, Rochester area, come visit us over here. Feel free to check us out on Patreon if that's your thing, or we also take those Bitcoin donations. So with that being said, thanks for showing up, thanks for sticking around, thanks for checking out what's going on in the news with me, and just exploring the Bitcoin price, seeing what Congress is starting to talk about at the SEC, and just seeing how where we got into is where we are, and from where we are we're going somewhere, and we don't know exactly where we're going, and we don't know exactly when we're going to get there. And so it's really about living the moment. It's really about taking care of yourself, taking care of each other. And when you do look behind, and when you do look at all of this path traveled, I would just encourage you to make sure that you helped as many people along the way, you encouraged as many people along the way, and you brought as many people to the moon with you as possible, because this is a game of consensus, this is a game of governance, this is a game of collaboration. And the more people who are involved, the more people who are participating, the more people who are on the network, the stronger this technology is, which is why we just want to each not just after we get past our own learnings and our own testing and our own experimentation, each of us just want to get on a couple people to share the information, to get other people involved, and before I don't know, it's a fun time, guys. So with that being said, thanks for sticking around. Until next time, I'm glad that together we are minting coins.